Hello everyone, in today's video we're going to be taking a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, and the bonds, as well as the international markets. Alright, so without further ado, let's get started with the video. Alright, so currently this is anomaly territory. We're currently very strong on the equities market. The dollar is very weak, and the international markets are absolutely all skyrocketing. The Japanese, the German, the UK, the Chinese markets are all doing really well. So while the bonds are also doing really well. So there's only been 2 times in the past decade that the S&P 500 was this far overextended to the upside without ever getting a pullback. So what we're going to do is we're going to look at both those instances. But the main important thing is, if you're not comfortable, right? This is not an opportunity, because it's still possible in history that we just continue going up, by all means, right? But the most important thing is not overextend your portfolio trying to go short. Because if we continue skyrocketing and you decide to go extremely short here, like obscenely short according to your portfolio, and we continue going up, then you end up losing money for absolutely no reason. So we have our thesis for what is going on in the market, and we're playing to the short side. But there is an instance in history, there are 2 instances in the past decade where we continue going up. So it's important to realize that. So those 2 instances are April of 2021 and May of 2014. So we're going to take a look at that right now. All right, so this is a chart of the S&P 500. This is a chart of April of 2021. You can see that we opened and closed outside of the B bands here. We were very overextended to the upside, and many people were basically going short here. many people were still going short here, and they ended up continuing to bring it up, and not just continuing to bring it up. There was never a pullback, so we never retested 400 for over a year, I think, right? Yeah, it was over a year. We never retested 400. We just continued going up. There was never a pullback back to that level. So this is the first most recent time in history where an extreme overextension to the upside just continued. The second time is May of 2014. So this is May of 2014. This is the other most recent time that this happened. So honestly, if we don't get a pullback, and the one time you guys decide to listen to my swings is like one of the most statistical anomalies in history where we don't get a pullback after this, then I don't know what to tell you, man. It is what it is. Not every trade is perfect, but this is literally 2 out of dozens of times where we do get a pullback. Generally, when we are this overextended to the upside, multiple times in history, we get pullbacks. But if this is one of those 2, if we end up making a third time going forward here on the SPY, then that is just once again like a very low probability chance. And if it does happen, it's still possible. But once again, because it is still possible, you cannot over leverage your position portfolio to either direction, no matter what. All right, even if there's a 98% chance of something happening, there's always a slim chance in the market where anything can happen. So in that instance, you never ever put more than 10 to 15% of your portfolio into any single trade or any single direction. All right, so I hope that makes sense. The next steps, basically, we should look more deeply into the dollar, the bonds, and the international markets. All right, so the dollar is really taking a beating here. And the reason why the dollar is important is because the dollar has an inverse relationship to the market. All right, so if the dollar is falling like this, then it's very bullish for the stock market. We should continue going higher. But the reason why I was starting to lean bearish is because the dollar was getting very overextended to the downside. And when it is this overextended, when any sort of security or anything the S&P 500, the NASDAQ 100, the Russell 2000, any of those securities are this overextended to the downside, there is a bounce. And if the dollar bounces, then that means that the stock market is going to fall. So that is another reason why I had a bearish bias. And right now, so let's take a look at the dollar on a weekly chart so we can truly see how weak the dollar is acting right now. So even on a weekly chart, you can see that it broke below all of this year's lows, obviously, right? And we're trading back almost to April of 2022 levels. And there's no real support until like 99, right? The 99 level, and then 97 basically. So 97.50. So there's still a lot more room to fall to the downside. And yeah, basically we need to see if on the daily chart the dollar gets some sort of love. And if not, then the market is going to continue rising, even though the dollar is showing this much weakness. All right, so there's that for the dollar. We're looking at those two levels at $99 and $97.50 as levels of support. So, you know, technically this should be getting a bounce. We saw recently, a few weeks ago, when the dollar was showing this much overextensions to the downside, we started to get a bit of a bounce. And during this period of a bounce on the dollar, the stock market tumbled and it had a bit of a pullback. So that is basically statistically in line for something that should happen. But of course, there's always rare exceptions. All right, so there's that for the dollar. Let's take a look at the bonds. So for the bonds are very important because they generally have a correlated relationship to the market. So if the bonds are doing well, then the stock market is also doing well. So I was showing how this bottoming out on the bonds was a good opportunity to start going long on the market. So because the bonds were this overextended to the downside, it made sense to be bullish. So we were bullish on the market. Okay. We were bullish on the market, and then we became bearish because the dollar was very overextended to the downside. But the dollar is continuing to take a hit and the market is continuing to increase. So clearly the short is currently not profitable. It's not working at the moment. But I'm going to give it some more time to see if we get a rollover. But if not, then we're going to take a loss on these shorts, and it is what it is. The most important thing is making sure that you don't lose more than, you know, your profits at the end of the day. Like, so never throw 50 or 100% of your portfolio into any direction. And yeah, you know, it is what it is. Losses come with the territory. And it's very, very rare that the dollar would show that much weakness. And yeah, we just have to see what happens moving forward. All right. So the bonds are like showing a lot of strength. And if the bonds continue to show strength, regardless, we need to see if the dollar is going to get some love, because all of the money currently is going into equities, especially into international equities, and the crypto markets as well. Got a lot of love because XRP came to an agreement with the SEC. You can see the German market is doing really well. You can see the Japanese market is bouncing and doing really well. The UK market even had a spike. Some more UK market, and basically the Chinese market has been doing as well, good as well. So yeah, you know, we just have to continue to see and monitor day by day. The most important thing that we have to monitor is if the dollar is going to get a bounce. If the dollar doesn't get a bounce at all, then things can continue to rally. But once again, in my opinion, regardless of how bullish anything is, right, it makes the most sense to be leaning short. Now, I know that we can continue rising. 100% we can continue rising. But instances like this, basically just take multiple... I'm going to be taking multiple stabs at shorts. But the most important thing is risk management. You cannot overextend your portfolio to a point where you cripple your portfolio. That's the stupidest thing that you can do. Otherwise, you know, just don't take any trade. But definitely it's just, it's too bullish to start being extremely exuberantly bullish. All right. If it does continue, it does continue. But in my opinion, regardless, now is not the time to be extremely, extremely bullish, in my opinion. What you could do is you could stand out of the way of the momentum. You could just choose not to short. But definitely it's starting to get riskier to go long, in my opinion. But of course, you know, at least I would wait for some sort of a pullback, but we're not even getting a bit of a pullback. But there are those two cases in history where we didn't get a pullback. So there's that. So you could take that and you could make your own decisions based off of all that stuff. But yeah, I hope all of that stuff makes sense. I hope you guys enjoyed today's video. I hope you guys enjoy all the content and everything that I put out. And make sure to download the app, joinwave.io. It's the first app that shares all trades completely for free. And with that being said, I will see you guys tomorrow morning during the live stream. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. All right. Thank you. Take care.